Monday, October 9th. Market analysis, Stan Ehrlich, and 10:09 California time. Real-time data. Remember, I screamed bloody murder on Friday that we have the October lows in place and that we have a bullish engulfing ER buy signal green, and it turned out by the end of the day to be huge. Okay, I am now telling you or predicting that the bullish engulfing buy signal on Friday was the October lows. In fact, the lowest low was actually 2 days earlier, October 4th. But that was very close in most indexes. And the beginning of this rally that we're seeing, I expect in the next couple of days, starting to get above today's high, starting to get above Friday's high on a closing basis, and which will eventually, very soon, this week, I believe, get above the old, now defunct neckline of what I expected to be a head and shoulder top, which was working great until Friday. And then all of a sudden, we had a gigantic, we're not going down anymore, bullish engulfing, green ER buy signal, which could have a rally similar to what we had on October 13th. Here's the spider. Here's the bullish engulfing on Friday. And last October 13th, we had this bullish engulfing a year ago in October. One reason to believe the signal's good. 2, oversold conditions and a green ER buy signal, very profound, higher highs for 4 previous days, all in one day after being lower and oversold. Yesterday, that's Friday. And that tends to kill the head and shoulder top, which was already approximately 50% down from its minimum breakout level, which was about 433. I expected 406. That's gone. That's dead. I do not expect any further new lows to the move. My fail-safe self-stop is below Friday's low. My new long, if I haven't got them already, and we do in some cases, position is going to be at 426.04 for the spider. And in the next couple of days, we may see it dip down to that level. That would be okay, as long as it doesn't go much lower than that, and it starts to go right back up afterwards. The next chart is the QQQ, and we never did break out of the formation to begin with. This head and shoulder top was building just fine, although it was extending to the right a little bit in the last week or so, more than I would have expected. I thought the breakout was going to be on the September 27th date, but it managed to close higher, even though it got below the line, neckline, and that is a no-no. When you get below the line, you're supposed to stay below the line. So that was one sign that this pattern might not work correctly, but that's the end of it. Friday, too much, bullish. I'm now bullish flat out across the board. Next chart. These downside objectives, and that's the NASDAQ, are now null and void. Next, we've got the DIA, bullish engulfing on Friday, almost exactly the same low, just a tiny bit higher than Wednesday of last week. So it's a tiny double bottom over 2 days. And this looks great as far as a bullish engulfing buy signal. Remember, we had a bearish one on the top of the market. Excuse me. A bullish one right in here. And unfortunately for the DIA, we didn't get oversold. So this gigantic bullish engulfing, bullish candlestick worked great, but it wasn't green, so we weren't oversold. Next chart is the Russell 2000, bullish engulfing October 13th, and a bullish engulfing and oversold conditions Friday. That's it. I do not expect 166 anymore. I think we've got the October lows in place. So it needs to be paid very close attention to for the end of the month, of course, into November. And then I'm going to start talking about soon the Santa Claus rally coming up, which has a 90% history of being profitable in the last 30 years. The history of the S&P. Next chart, 1 minute spider climbing back up a little bit. Next chart is going to be just a second. Okay, here is our Russell 2000 1 minute chart. A few minutes literally after the opening, we touched our trigger price entry for ER3 We're long almost exactly at the low of the day. And we have a great profit in progress. Plus our trailing stop, the yellow line, has already accelerated upwards. I think I manually, I probably did, change the stop or kicker. We call it a kicker. And the kicker is the speed at which the yellow STS smart trailing stop moves. So I'm already protecting a profitable trade if it backs up and hits the yellow line. Next chart is the NASDAQ December. Didn't quite have the signals we need. Been making minor new highs here this morning in the last hour or so, looking real good. QQQs, new highs this morning, just recently, an hour or so ago, looking pretty good. All I want now is to close above Friday's high. Here we go with the DIA, bullish engulfing buy signal on Friday, and it happened exactly at 8:14 California, well, in a minute or two earlier, 8:11 California time, when it had the bullish engulfing and it turned green real time. So ER1 bought it right here, and ER1 scalp, I don't know, it had no way of losing any money, frankly, where it got out, but ER1 overnight may very well still be long, depends on your trailing stop. I'm just not showing you the trade. We have an entry for the EZS E-mini December futures contract, again, almost after the opening bell, and it was almost the low of the day, almost exactly, very, very close. It's doing extremely well. I love how this trade is following through so far, but it's very early. If you're an investor, don't wait around too long. Wait until you're convinced that I'm going to be right. I hope I'm going to be right. I'm not always right, but it looks awful good at the moment. Okay, so that's it for stock market indexes. I'm going to go to the MES, MES, just to show you the micro mini E-mini got long overnight, and that was at just past midnight, and we're still in the long position because it's the S&P 500 doing fabulously. The daily chart shows the dip down to the green dots and a tiny bit below that, just so you make sure you get filled. And we're way above the opening at this particular point. Again, that was Sunday afternoon. And this is the micro E-mini. And I need to get it above real soon, sooner the better. Friday's high, closing above Friday's high, and just accelerating upward. Now this pattern I'm probably going to erase within the next day or two, but I want to leave it up for a day, maybe more, to show you that these patterns don't always work as they should have. Now, we had plenty of profit potential on the head and shoulder pattern if you were trading the pattern. All right, futures. Here we go. The E-mini again, we're in. We touched the green dot. We had a sell signal at the top of the market, July 27th, was it? Yep. And we had a buy signal October 13th on the E-mini. You can't get better than picking the bottom and the top to the day. Next. Okay, NASDAQ never broke out on a closing basis, and I've touched on that already. Bonds are now above Friday's high. Friday looked like exhaustion weakness because it jabbed down substantially to new low ground, but failed to close below previous lows. So we got a little bounce going here. This is not that big a deal so far. We need to close above the high of, let's say, the last 3 days of last week. That would help a lot. We're oversold a lot, so I'm fully expecting that's going to happen. I like the looks of this. This could be a significant turning point. It doesn't have any particular pattern other than being extremely oversold. What about notes? Same thing on the 10-year notes. Now it's not oversold anymore, and we are easily above the highs of Wednesday, Thursday, Friday, even Tuesday, Wednesday, Thursday, Friday of last week. So it's coming along a little faster, a little better relative to previous highs in the last few days. Next chart is crude oil. Got down into support on Thursday. I talked about that. Started to reverse, looking interesting about holding in support with a reversal in oversold conditions. And bingo, we've got ourselves a little rally here, but it did gap up. So coming down to the high of Friday would not be a surprise, and it is the beginning of support. So 83.46, call it 83.50 in the next few days might very well be a good buying opportunity. Bullish, intermediate to long term. Now, I can't say that for heating oil yet. This is a little bit more complex. Support didn't hold on a closing basis, and even on Friday's rally, it stayed below support on a closing basis, but this changes things a little bit. Let's see where it closes today and the next day or so, above or below the red zone. Next chart, natural gas, very overbought. The most, really, for several months, and almost lower on the day, but not yet. Don't jump the gun. So we might see a little bit higher highs still, and now the market's turning down soon because of the overbought condition. Next, we had a bullish engulfing in gold on Friday. I believe we had a bullish engulfing, or almost, before my recording on Friday. I don't remember. But at the end of the day, ER, buy signal, point blank. I think this could rally back up to 1917, 1918, 1920-ish very quickly. We do have a gap, so I'm not surprised if we come down to the high of Friday or thereabouts, and then go back into new high ground. It looks like a classic spot for a breakaway gap, but they're often closed also, a little less so than your common gaps or exhaustion gaps and so on and so forth. So I like what I see. I'm bullish on gold. Next, silver. Oversold conditions pop back up on Friday. New high close for most of the week. A little bit of a follow through here. I can't say silver is quite as bullish. Besides, we got a heck of a lot of resistance starting at 22.60, and we're already 22 almost, 22.9. So it doesn't have too much more to go until it's going to have some trouble rallying more. Next, platinum. Again, we have a bullish engulfing ER buy signal green. We're long ER1 overnight. ER1 scalp looks like it made a little bit of money. It's in and out, of course, in a day trade. It's a scalp on Friday. And today we have follow through, which is what you like after signals, and looking good. We are bumping already at today's high against a little resistance, but it's so close. I think this bullish engulfing has a lot more to go. I would expect to see 924 easily, frankly, this week. And I wouldn't be surprised to see 968. There is an old gap to close at about 974. Next chart, high grade, copper, oversold, bounce, a lot of resistance overhead, probably not going to go very far. And I think it's going to turn down pretty soon again to new lows. Next, soybeans is staying below the major blue resistance area here, which used to be support. This time, for the last 2 or 3 months, 3 months or so, we've made new lows. We've stayed there on a closing basis on Friday in particular. And today we're going down a little bit more. I think we're going to see new lows again. I'm bearish to the tune of maybe way down to 1070. Not out of the question. Big move here in soybeans. Next, oh my gracious, whatever, major outside down day, bearish engulfing. Now, it is such a big down move today that it's starting to get oversold. So, although this is bearish outright, the Japanese candlestick bearish engulfing, we are oversold. So I'm not going to be surprised if we come back up maybe to at least the middle, if not maybe close to the high of today. But this should continue to push soybean meal down, down, down. I have now drawn in the neckline. Again, there's a head and shoulder top. Now, hopefully this one's going to work perfectly. So far, we are halfway down. I have a minimum downside objective of just a little under 50. And we're already a little under 54. So there's nothing wrong with this head and shoulder top to any significant degree. It's just plain old everyday working. It's got a double top for the head. The second high is a ER sell signal on the high. So these two highs of the head, the shoulder is over here on the left in early July, specifically July 5. And the last shoulder was a false bullish signal on September 15th. That was a top, not a bottom. Normally you see green on the bottoms and red on the tops like that. So the pattern is dominant and working great. Next chart is meal, trying to break out of a very big sloppy, I should resize the scaling on this, excuse me, very big sloppy head and shoulder top formation. Very wide shoulder, a couple of months, the same for the head and the same for the last shoulder. When we got down to the neckline a few days ago, we failed to stay below it. So far, no official bearish breakout. I need to really close below the lows of last week. I think it's going to do it, but it hasn't so far. If it does that, your minimum downside objective is going to be all the way down to 254 if everything works correctly. Next, corn. I'm looking for lower lows. It's a rally back up into resistance. I think corn's going to do the same thing that wheat has been doing, and here's the wheat. Making new lows for a long period of time, rallying into resistance. Rallies don't hold. New lows another week or two later, and rallies like we see in the last couple of days, I don't think are going to hold. And this week, next week, we're going to see new lows again below a week and a half ago. Next, cattle. We've had some great signals here in the top formation back on March 1st, almost the top again, April 19th of 23. The high of the rally for a good break on June 7th of this year, the high of the rally on July 20th of this year, and so far, the high of a darn good rally, really past tense now, period, and that was November 9th of this year. I meant September 19th, I'm sorry, September 19th. So, hey, November 9th hasn't happened yet. New low close coming up real soon this week, I expect. And I think we're going to challenge 181, if not maybe break below it. Bearish, hogs, bounced off support last week, bounced back into resistance. I don't know, kind of between a rock and a hard spot here. I'm going to have to wait on further commentary on hogs, but it looks a little bearish from my point of view. OJ, I learned today that there is some kind of green something or other disease in almost all of the Florida orange trees. Since I'm not much of a fundamentalist, it took me a while to catch on to that, but I could see it happening in the orange juice. From a technician's standpoint, when we get a bearish engulfing ER sell signal in OJ, especially if it's a big one, I'm going to scream bloody murder on orange juice for a long time to come. Hasn't happened yet. Next, cocoa. False upside breakout. It's trying maybe to form another shoulder in the next couple of weeks, maybe a little bit of a rally up to approximately 3,063, 630 here, I meant. If that's true, and the next week or two we do come up a little bit, then this is going to be the neckline probably, but I don't know yet. It's premature so far. Otherwise, I would drop it down to here to show you that it is a little bit of a support. But right now, there's a chance that this could develop into something much more significant. Next chart is coffee. Like so many other beans here, soybeans and the like, coffee beans look like they're going to make new lows and continue to do so. Support has not held. On a rally, it stopped in support resistance now, and it's trying to make new lows for the trend down, and it's not oversold yet. I'm looking for 135 and maybe even a lot lower. Next, sugar, the sweet. Not too sure about this. All the lows are higher over a significant amount of time. In fact, a year. Most of the highs over a month or two or so are higher also, and that basically is a definition of a bull trend. So, having said that, bullish, but I am not coming up with any good numbers. Next, cotton the rag, between a rock and a hard spot, popping up into resistance today, now lower on the day by a small amount. I think cotton is about to bend over and slide downwards. Here we go. E-mini again, looking great. Now the S&P 500 spider is higher on the day by 36 cents. So DIA is also higher on the day after a gap down of significance this morning in order for us to get long. You guys have a great trade. Have a great day.